Good morning, it's Friday, day of the US CPI number, Consumer Price Index. So be careful, it's a big inflation number for the US, could be market moving. Now we had some market moves yesterday, which I hadn't really expected. I thought we'd continue sideways into the CPI number. I was wrong. I'm not sure if that was triggered by the ECB saying they would raise interest rates. I don't know why they're going to do that in the future and not start now. It doesn't really make any sense, does it? They're already behind the curve. Anyway. Right, I've got Ethereum on here. Just if you're playing with crypto, it's been pretty quiet lately. But we do have this descending triangle in Ethereum, and we are holding on to some support down at 1700. Looks like that could break eventually to the downside with that descending triangle. Resistance is at 1900. Anyway, you'll know that if you've read today's crypto report. Gold is still trading sideways. Nothing to show you there. Let's jump to the dollar index, which has jumped itself. So there we go. It's back above the resistance level at 102.60, 102.80. That held quite well three times or so when it was tested. We've now burst through it. Of course, the dollar is in a longer term bull trend, has been for over a year. So it looks like we're resuming that bull trend. I see no reason why we can't get up to 104.50, 105.00. Of course, if something dramatic happens with the inflation number and inflation collapses today, then I guess that would pull the dollar down. It would mean that the big interest rate rises will cease. And unless that happens, and it seems highly unlikely, doesn't it? Then it does look like the dollar index can jump another 100, 150 pips into next week. The big test will then be at the 105.00 area. Do we get a double top or do we break higher and then start the next leg up? That's probably the favoured outcome. We've held a really good support level down at 101.50, 101.25. Broken up through there, so I think the dollar will now continue to move higher. So maybe the period of consolidation, the sideways movement, won't last as long as I thought. Maybe we do now have some direction, and we'll see things like the Aussie dollar, the New Zealand dollar, the Euro dollar start to move lower as the dollar recovers. Obviously, as I said, contingent on a strong or on a firm CPI number today. The Aussie broke lower, so what was support now becomes resistance at around 71. What have I got on my report today? 71.45, 71.55. Same for the New Zealand dollar, also broke support. So that actually has been the weaker of these two. And so we've got resistance at 64.30, 64.50 should there be any bounce. Now, this is interesting. The yen. The yen obviously has been very weak. We expected it to go up. But yesterday's price action wasn't as bullish as it should have been. And perhaps now that we've got particularly severely overbought, as you can see on the daily chart, with a big red candle yesterday, plunging in halfway down into Wednesday's price action, this does indicate perhaps that we need a consolidation after such a strong run. I mean, it really has been a strong run. Look at it. Aussie dollar has risen from 87.26 up to 96.87. You know, just short of 10 points in what, 3 weeks? In a month. Sorry, in a month. So pretty good move. The weekly candle will give us a clue, especially if it has a little red body on it today. So we'll keep an eye out for that. Japanese yen actually is actually, well, we did not make up any ground to the upside yesterday for the US dollar. The dollar was very strong against other currencies. It was not strong against the yen, which of course indicates that there is some yen strength. And even today, we're seeing the beginnings of a red candle. So I'm wondering if, I'm not going to say this is a sell signal. It definitely isn't. But with yesterday's doji, then I think there is a strong chance we are going to consolidate for a while. We need to ease this overbought situation. I'm not suggesting a short, but I do think there is a good chance we will dip to support levels where we can look to buy in and see if we get a bounce in the bull trend. But don't be surprised to see us holding that high of 134.55 for quite a while longer. Euro yen. This, again, a nice bit of profit taking. So we don't quite have a bearish engulfing candle, but we do have a big red candle. So again, indicating that maybe we can get down to 141.50, 141.30, which is a good support level today. Euro yen won't be too affected by the CPI number, so that maybe is a little bit safer to trade. Anyway, you've got some levels on the report. I've got 140.160, 140.140 as a big support level should we fall that far. New Zealand dollar versus the Japanese yen. We'll have a look at it because we're looking at yen pairs. Potential double top. I could argue that this is a potential double top. We're very overbought. You can see that we've fallen just short of the April high. Do I think it's a double top? Would I be getting short? Probably not really. When you look at the other pairs, it does look like it's more of a consolidation than a sell signal. So I would certainly be very cautious. Euro versus the US dollar dipped yesterday. I guess that's on the failure for the ECB to raise interest rates, although we did have a little bit of a spike higher initially. We have got support today. Where have we got support today? 106.25, 106.15. So we're testing it right now, and it certainly is holding. Let's see if it holds throughout the day. Canadian dollar has got some good levels to trade. I've got a support and a resistance level there. Absolutely rocketed. That's one pair where the dollar really did surge. So we've gone up to a pretty strong resistance level at around 127.25, 127.45. The buy level, the support levels on the cheat sheet, as you can see. Stock markets were hit. The DAX had worked so hard to get above the 100 and 500-day moving average that I thought finally this would act as a platform for some further gains, but it was not to be. The market reversed quite quickly yesterday and is plunging back. Messy chart, really. You can see it's been quite erratic for the last 2 months. So it's not that easy to read, if I'm honest, but I've done my best with the levels today. The US markets also took a tumble. The S&P broke out of that recent range, went down to my support level at 40.50, 40.40, but it's actually broken that as well. So we're back below the fib level of 40.43, the 500-day moving average at 40.48, and we're also well below the 100-week moving average at 40.83. So pressure to the downside again in stock markets. As you can see, we have been in a bear trend for the US stock market, for the S&P, ever since January, and you can see how nicely that little trend line held the upside. So pressure is now to the downside. Nasdaq, that worked a bit better because I was brave enough to call a short position at 12,700, 12,800, and that has worked quite nicely as the market dips. But we broke yesterday's support level at around sort of 12,350, 12,400. So this looks like the Nasdaq has resumed its bear trend for this year, and further losses starting to look likely. I guess all of this is CPI dependent today. Okay, good luck if you're in the financial markets today. Have a great weekend, and we'll chat again on Monday.